how to prepare for the week using the CycleEdge software. As you know, if you're a member in the Global Trader Club, I've already put the CycleEdge reports. Okay, so for Bitcoin, gold, Eurodollar, and the 3 US indices, we have them already there. And today, I've also put the overall hours for the full month of July, when the market is expected to turn or break out here in the weekly market timing. Now, in the weekly market section, we are no longer going to have trade or swing days and vector days because they're already in the reports. Okay, so how can one use the CycleEdge report to prepare for the week? Preparing for the week from Sunday is the best way to go. So let's do an example and let's go over the CycleEdge report for one asset for the next week to see how we can use it. Now today I've sent a DAX report out for the next week, so why not take a look at that, right? So this is DAX, and as you can see, it's for this week only. When you open up your CycleEdge report, if it's for the full month of July, you'll get the full month of July. This is just for the week, so we'll take a look at for the report for just this week and see how to prepare for it. Now, before you look at the daily, right, which is here, the important thing is to go to the weekly, because the first thing I want to know is when are we going to have a trade or a swing day. Even though here it will give you a bottom line about Tuesday, Wednesday and Thursday, and they are correct. These 3 days you're going to have to look out for DAX this week. What you want to do is, if you want to narrow it down to the best day, then you scroll down to the weekly. So we'll come back to the daily afterwards, but let's first take a look at the weekly. Now in the weekly, the system is already going to give you a bit of information. This is important to look at. Macro events, okay, for the week. So the reason you want to look out for the macro is this is where you're going to get that shift. Okay, if there is a shift in the market, it's going to tell you in this place here. And as you can see, right, it says on Thursday 9 July, cycle phase transition, phase window July 9 to July 16, 4 to 7 days. Expect a regime shift in market character. Trend acceleration or trend reset is likely as the new phase develops. Action: reevaluate long-term thesis. Mark window for sector repositioning. Okay, so this is like obviously important information. And then let's take a look at the summary. Now the top picks for, as you can see today, this week, we've got Monday, Tuesday for 3 stars, and a Wednesday, July 8, 9, 2 stars. So what is it telling me here? Let's take a look. Monday and Tuesday, I've got an inception cycle week, cycle 4, cycle 6, trend, cycle, resonance, active. Obviously the cycle 4, cycle 6 is going to be a bit of an overkill for somebody who doesn't know what we're doing. So if you don't know what we're doing, you're just reading the report, just focus on the date. You understand, okay, that Monday and Tuesday are going to be important. The other time is Wednesday and Thursday. Now when you have 2 dates, this is 2 sets of dates, Monday and Tuesday, Wednesday and Thursday. This could be a retracement or a push up, and this will be a U-turn, right? So you understand, if the market keeps going up, we're going into probably Wednesday, and then Wednesday, Thursday, we could come back to chuck a UE again, or we're going to pull back to go up, right? This is also very relevant because you're going to have to use your technical analysis as well as the report. This report alone is just for the timing. So if you're trading DAX, let's open up DAX. Now, as you can see on the daily, we have a breakout. Okay, so two things can happen. We're either going to go into Wednesday, Thursday, and we're going to go down, okay, or we're going to come into Wednesday, Thursday, and we're going to go up. So this Monday, Tuesday is going to determine where we're going to end up. Because this is a nice breakout, as you can see, the market broke out nicely, making higher highs with gaps. What would be ideal for us? Well, the ideal would be if we came back to close the gap and then we went back up with it. Okay, that's the ideal. Why? Because we're closing the gap, the trend is up, it's a strong breakout, so let's follow through when there's a trade there happening Wednesday, Thursday. The other option is it may not come back, it'll just keep going Monday, Tuesday, fair enough. Then on Wednesday, Thursday, we'll have to look for a pullback to come back into closing these days. And we're going to do that trading during the day. Okay, so the important thing here also to understand is we're going to use the hours. So once a report is done, once you pick your days, okay, before you go to the daily, read the whole weekly thing. Okay, so trend analysis. This week reaches a 17-way peak on Wednesday, an extreme day. Multiple independent methods simultaneously flag the state. Markets frequently produce their most significant structural pivots within such dense windows. Build your entire week's trading plan around July 8 as the structural anchor. So this is where we're expecting the market to do some kind of a turn, which we want to capitalize on. Energy this week is mixed. False breakouts and whipsaw moves are elevated risks. Knowing this is an advantage. No, it doesn't happen every week. So if it tells you that this is a risk this week, it's a risk this week. Okay? It's not a risk every week. It's a risk specifically for this week. Accordingly, you can do whatever you want, obviously, but the report recommends reduce size on breakout attempts and use grade A intraday signals to identify range extremes. Key pivot point. Now on Wednesday 8, this is the critical Wednesday, July 8th, critical peak, mark this date. Apex tier confluence is the highest conviction signal type. Confirm direction with price action as the session opens. Do not pre-anticipate. Actionable notes. Once again, July 8, macro alert present. It means a bigger swing is in play. Position sizing. Obviously, you probably know what you're doing. If you don't, you should learn what you're doing. Swing days plus timings and levels. Now put a pricing factor in there. So for July 8, okay, if we end up around here, what can you do? You can look for prices. Where? Here. All right. So these are up targets. So if the market goes up to turn around on Wednesday, look out for these prices. The price model is something I'm still working on. All right, so don't get carried away with it. Do your technical analysis. But as I do the next stuff, it's going to be better. And it's going to show us a bigger range when we're doing a weekly, monthly kind of report. Okay, so same for the downside. Support targets to the downside, resistance targets to the upside. If the market moves away from the price, then let it go, obviously, okay, because it's broken out and moved forward, or it's reversed and is going the other way. They're still relevant if the market retraces, okay? But, it can do that, obviously. And then right at the end, we've got the monthly. Now, in the monthly report, these are all summary stuff, okay? Just understand that these days are turning point candidates of the month, meaning, like I said, 2 to 3 weeks of a reversal or market changing regime for the next 2-3 weeks, accordingly what it says, like 1 to 3 weeks here. Okay, so just be mindful that that kind of a reversal can allow you to follow a trade or a move for more than one day, more than a few days, more than a few weeks, so you can keep pushing in that direction until the next regime change happens in the market. And that's that. So, and then we have another cycle phase shift on Thursday, the 9th of July. So the 8th and the 9th of July will probably highly likely give us a longer term or a medium term, like I said, 1 to 3 weeks, 2 to 8 weeks change. Okay, long-term cycles, and here you can see there's one starting on the 8th of July. It's going to peak out on the 20th of July. So that is also worth noting. Underneath there, here we've got a composite price line and some price levels here, which you can take into account when the market is going up and down. Okay, and that's basically it. All right, that's the full report. So you want to prepare for Wednesday, and Wednesday and Thursday we're going to have some kind of a reversal where the market will make a swing for the longer term. So you can set up your trading IDs accordingly. If you see Monday, Tuesday market going to the upside, or you want to trade Monday, Tuesday to go up or to retrace down, then what can you do? Well, you take a look at the daily insight. Let's first take a look at Wednesday and Thursday, because they're the reversal days that the report emphasizes. So I come to Wednesday. First of all, there's something you can see here, right? It's a high tension day. It's a possible swing trade day. Great. Alert windows today, 155 to 545. It says sustained pressure. So the thing I want to take a look at is, if the market is under pressure, okay, will they sell off at those intervals? Well, this is DAX. When can they do that? Well, here's the US session, 3:37, according to Amsterdam hours, is probably going to be around, what is it, about 9:40, I guess, in New York. So this is one session you can look out for. Okay, DAX is obviously, the German index. So what else you can look out for? You can look out for 1125. All right. So you can see that's a cycle peak trade hour. That's expected sustained pressure. So the market can be at a resistance or a support level where the market is like under pressure. They're like keeping it there, sustained pressure. And then another cycle peak, 841 to 926. So these hours you look out for. And if you're in the members area, obviously what you're going to do is you're going to go to Monday and check out on Monday or Tuesday or Wednesday, the day you're trading, what the overall hours for that day is. Then you're just going to match it with this if they are matching. Okay, and then you're going to say, okay, that's what we need to do. I would take these into account. They work really good, especially when there's a trap coming. Okay, so that's Wednesday. So let's take a look at Thursday. And on Thursday as well, here we have the alert window hours. Okay, it's a cycle phase shift. It's a macro event in play. 11:30 to 3:15 momentum push continuation. This is bloody good to know. Okay, 6:15 to 7:30 trap like reversal, momentum push continuation. All of these, they are good information to know, because you can really follow what the price is doing. A lot of the times, like last week, all of the gold momentum push continuations worked. It was like boom, boom, boom. Euro dollar also worked. Boom, boom, boom. So if you got the right setup from a price perspective and your technical analysis, then see what happens at those hours. And if there is a push, you can scalp the market. Knowing it in advance is like bingo. Okay. So what else have I got? And these are the hours. All right. For Thursday. And then we've got Friday. Once again, alert windows. Now, there are no trade hours here, as you can see, for some reason. Okay, so maybe specifically for DAX, there's nothing special. Not a problem at all, because you just go here and July 6 to 10, look at Friday, check out the hours for the overall market conditions. And that's it. So basically, this is really straightforward. You look at your trading week first. See what days are good. See if there's a major cycle that's going to cause a shift in the trend, like we have here, Wednesday, Thursday. Then those days are going to be your focus days for trading and expecting market turnarounds. In those days, you're obviously going to do your own technical analysis, but you're going to look out for those special hours and alert windows. Right, very important. Okay, sometimes you'll hear people saying, oh, the buyers got trapped, the sellers got trapped. Well, that's the trap, and this is when it's likely to happen. So let's say the market is going up, for example, right? Let's take a look. Sometimes the market is going up. What they do is they push it down like here. All right, let's get better color. They push the market down. This is a trap. And then they go bang to the upside. Okay. Why? Because all of a sudden everything was honky-dory, and then bang down to go bang up. And that is like exactly what it's talking about. Same here, for example. Look, the market is going sideways. Breaks out, traps all the buyers, comes back down, bang, going back up again. That is a trap. Okay, it trapped all the buyers there, and then, you know, if they had their stop losses here, they got stopped out, and then the market turns around. So the market does these traps. There's another one here. Market going sideways, all of a sudden bang down, and then going back up. So those are all our setups. Okay, we're doing all of those are just for us, like information, and you're getting them with your alert windows. If there's a momentum, like for example, momentum push continuation, it'll give it to you. It'll be something like, it could be something like this. It could be something like this. It's a momentum push. Okay. Happened last week with gold and euro dollar. It was like momentum push. It was like market pushing. Okay, we had a shock day. Sometimes in the report you'll see it's going to tell you, you know, it's like a shock day. Here it says, you know, vector day, right? These are all blank. Sometimes it'll say it's a shock day. Sometimes it'll say it's a flow day, and those days are like really important. You can, you know, flow with the day. If it's a shock day, be careful. Like we had Bitcoin 3 days in a row, shock day. And, you know, that was like 2 weeks ago. It was like bang, 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 going down 3 days in a row. And all three were shock days. So look for that good information, because you won't find that kind of information anywhere else on the planet. You just won't. Intraday trading hours, possible long-term trend change. Okay, what date's going to happen? Highly likely. What hours is going to happen? Are we expecting volatility? What hours, during what periods? What are we expecting? Okay, so those kind of comments you're not going to find anywhere on the planet, nowhere. Okay, now sometimes you'll see grade A, grade B, grade C. If it matches your time, take the trade, okay, in the direction of your bias. Because we're using tight stop losses, because time and price are matched, your stop loss shouldn't be too far out. Okay, then if they match and you understand your bias, go for it and go with it. You could reduce your lot size if you want to go for grade C or grade B or whatever, but these are within the day, okay, in the day, at the hours. Okay, the grade A's and the B's you see on the weekly and the monthly, when I print reports, I normally give you guys grade A only. Okay, so you only see the grade A's here, and that's fine. That's all you need. Okay, same with the monthly as well. As you can see, they're both grade A. Why? Because for a person who, who's just using the report, too much information is not good. So from the weekly, pick your date. It's going to be 1 or 2 dates. Okay. Sometimes when you do get 3 or 4 days, the reason that happens is because the market takes a few days to turn around and it gets choppy, right? So be careful for those choppy moves when the market is doing some kind of an expected regime change. Okay. And one other friendly reminder I think I should do is the 5-step protocol. Now this is in the members area. You guys already know about it. If you go to start here, welcome to how to use the research portal. It's down here, the 5-step protocol and the framework. You can download them both, not a problem. And the framework and the 5-step protocol, they're just easy steps to use. Also, if you're doing a challenge, okay, just download it. It's an HTML file. It'll pop up on your browser. Then all you have to do is, like, if you're doing a challenge, put in your challenge amounts. These are default settings, but you can change them, right? So if you're doing one for 100,000, let's say, then put a 0 here or whatever, or just write 100,000 and profit targets or whatever. And the whole idea with this is, if you're doing it, then you can calculate your risk and so on according to that challenge, which makes life easier. Okay, so that's your technical analysis, timing analysis, plan the trade, execute the trade, log and post-mortem. Now right at the bottom, when you do all of that, these will come out anyway automatically when you fill out the details. You can see it's very straightforward. It's not too detailed. It's not going to drain you out, but some things you do have to note and write in there, and that is important. Okay, especially like stuff like what went wrong, what went right, what needs to change, and did you follow your plan, did you deviate, why? And the thing is, the beautiful thing is, you can copy the summary, put it on a Google worksheet or spreadsheet or your Word document, whatever you're using, and then you can reset it for the next time. So you'll have a log of all the things you did, and it's very important to go back and review them afterwards at the end of the week so that you can see where you've been doing right or wrong. In fact, at the end of the day as well, if you did take a trade, or even if you didn't take a trade, because you'd want to know why the trade didn't happen if you were planning one. Okay, so this is really important as well. And that's your CycleEdge stuff. Okay, so those things you don't need. That I've talked about. This is a mock-up we did for, so if you're doing DAX, if you trade DAX, follow it through. And even if you're not trading DAX, just take a screenshot of everything that you saw and just see how the market went. Just remember, these are Amsterdam hours because I sent it specifically for somebody who is in Holland. So keep that in mind. All right, and if you have any queries, questions, always feel free to reach out to me, and have a good trading week already.